Hello and welcome. If you're gearing up for the NISM Series 12 exam, you are in exactly the right place. We are about to break down Chapter 1, Understanding Securities Markets. This chapter really sets the stage for everything else, so getting these core ideas down cold is absolutely crucial. You ready? Let's get into it.
All right, here's what we've got on tap for today. First, we'll get the big picture view. Then, we'll nail down what a security actually is. After that, we'll explore the market structure and all the key players. We'll also cover the regulators, the rule makers. And finally, we'll wrap it all up with a checklist that's built specifically to help you ace your exam.
Okay, first things first, let's look at the big picture. Before we dive into all the nitty-gritty details, it's really important to see where the securities market fits into the whole financial system. So take a look at this. This lays out the entire Indian financial market pretty clearly. You've got the money market. That's for short-term borrowing and lending. You've got the currency market, and then right there in the middle, that's our focus, the securities market. You can think of this as the engine room for long-term capital, covering both brand new securities and the trading of existing ones. So what's its main job? Well, it boils down to this simple but incredibly powerful idea. The securities market is basically a bridge. It connects people who have extra money, savers, with those who need that money to grow, like companies building factories or governments funding big projects. It's all about channeling savings into productive investments that really fuel the economy. Okay, so we know what the market does, but what exactly is everyone trading? That leads us straight into our next section. And for your exam, let me tell you, knowing the legal definition of a security is a must. This is the foundation of everything. Now, here's a crucial point. The term security isn't just a casual word. It has a very precise legal meaning, and it comes from the Securities Contracts Regulation Act of 1956. You're definitely going to want to remember that name, the SCRA. It defines a security as a financial instrument that basically proves money was exchanged between two parties, and it comes with specific rights and obligations for both sides. And as you can see, the SCRA covers a really wide range of things. We're talking about the usual suspects, right? Shares and bonds, which are basically ownership and loans. But it also includes more complex stuff like derivatives, units of mutual funds, and even government securities. All of these things fall under that same legal umbrella. So that kind of brings up a question, doesn't it? What's the secret sauce that turns a regular financial agreement into a full-blown security? Well, it all comes down to one single word: transferability. It's the ability to sell that financial asset to someone else in a market. That's what makes it a security. Let's use a quick example to make this crystal clear. Think about a bank fixed deposit, an FD. That's a contract just between you and the bank. You can't turn around and sell your FD to your friend, right? It's locked in. But a certificate of deposit, a CD, is different. That's a security. If you need your money early, you don't break it. You sell it to another investor in the market at whatever the current price is. See the difference? That transferability is everything. All right, now that we know what we're talking about, let's explore the ecosystem itself. Who are the players? How is this whole thing structured? This section is going to break down that entire landscape for you. The securities market really has two parts that depend on each other. First, you've got the primary market. This is where new securities are born. Think of an IPO. That's when a company sells its shares directly to investors for the very first time to raise money. Then you have the secondary market, which is what we think of as the stock exchange. Here, all those securities that were already issued are just traded between investors. So the primary market creates the assets, and the secondary market gives them liquidity, which is what makes them so valuable. You can really boil down this whole market ecosystem to just three main groups. You've got the issuers, they're the ones who need the cash. You've got the investors, they're the ones who provide the cash. And then in the middle, you have the intermediaries. They're the facilitators who make sure the whole exchange goes off without a hitch. So who are these issuers anyway? Well, it's a pretty diverse bunch. You've got companies looking for money to expand, governments issuing bonds to pay for projects, banks that need more capital, and even mutual funds that are issuing units to the public. Pretty much any entity that needs to raise money can be an issuer. And on the other side of that deal, of course, are the investors. We can split them into two main camps. First, there are retail investors. That's people like you and me, investing our own money. Then you have the institutional investors. These are the big guys. Organizations like mutual funds, insurance companies, and pension funds. They manage huge amounts of money and have teams of experts. And the glue that holds this all together? The intermediaries. Now, for the exam, you've got to know these roles. Stockbrokers, they're the ones who actually place the trades for investors. Merchant bankers, they manage the whole process of a new issue, like an IPO. Depository participants, or DPs, let you hold your securities electronically in a demat account. And finally, registrars and transfer agents, well, they're the official scorekeepers, maintaining all the investor records for the companies.
Okay, so you've got all these people in companies interacting, trading huge sums of money. You're going to need a strong rule book and a referee to make sure everyone's playing fair. And that brings us to the regulators. They're the ones providing the oversight that builds trust in the entire system.
In India, it's not just one group in charge. The big one, the main one for the securities market, is SEBI. But the RBI also plays a massive role, especially with debt and money markets. Then you have the Ministry of Corporate Affairs, which sets the rules for how companies can issue securities in the first place. And overseeing all of it is the Ministry of Finance. Let's zoom in on SEBI, because it's the principal regulator. Its entire mission can be broken down into 3 key goals. Number 1, and this is the most important, protecting the interests of investors. That's you. To do that, it regulates the entire market infrastructure, the stock exchanges, the brokers, all the intermediaries we just talked about. And finally, it acts as the market's police force, banning things like insider trading to make sure it's a level playing field for everyone.
Wow, we've covered a ton of ground. So let's boil all of this down to the most critical takeaways for your exam. Think of this as your final checklist to make sure you've really mastered the key ideas from Chapter 1.
First off, why does any of this matter? Just remember the 3 big economic jobs of the securities market. 1, it's the best way we have to channel savings into productive investments. 2, it provides that all-important liquidity, which gives people the confidence to invest their money for the long haul. And 3, by doing those 2 things, it makes sure that money flows to where it can be used best, which drives the whole economy forward.
And here it is, your final prep slide. If you can confidently explain these 3 things, you are in fantastic shape for this chapter. Number 1, can you define securities based on the SCRA 1956 and explain why transferability is the key? Number 2, can you clearly lay out the difference between the primary market, where securities get created, and the secondary market, where they get traded? And number 3, can you list the main functions of SEBI with investor protection right at the top? If you can nail these 3 points, you've absolutely got the essence of this chapter down. Good luck with your studies.